Investment in the real estate market has for long been considered as the safest form of financial preservation and the storage of value in wealth. But in line with the changing global landscape, a lot of what happens in the sector is continually being redefined by factors outside the traditional ecosystem, including politics. Obinna Onunkwo is a seasoned security analyst, and he joins us for an overview of Nigeria's real estate market. And Obinna, I want to start off by saying, okay, thank you for joining us here on Newsday. Can you provide an overview of the current economic landscape in Nigeria and its potential impact in the real estate markets?
Well, the economy right now, the growth is slow, and that's because there's been a transition, and the new government has come up with policies to boost growth. And one would expect, obviously, that from the time the policies are implemented to where you see the full effect, is going to take a bit of lag time. But within that context, we also need to look at where are we coming from, right? Post-COVID, the fastest growing space in Nigeria in the sector is ICT, number one, financial services, and then real estate. Oil and gas last year had a negative growth of 20%. So you can see the drag in the economy. If you look at the biggest aspects of the economy, the big baskets are real estate is 9%, real estate and construction is 9% of the GDP. Trade is 16% of the GDP. IT is 60% of the GDP. Agriculture is 25%. So you find that we are a very diversified economy between ICT, real estate, and construction and manufacturing. You can see that the economy is diversified. So any policy impact you make in those areas is going to have a multiplier effect on stimulating growth. So it will be interesting to see how the government policy and what they want to do in those areas to stimulate growth, in those particular sectors.
Very good, Obinna. Now, what strategies do you recommend for investors interested in the Nigerian real estate sector, and how can they overcome the challenges and, of course, embrace opportunities as well?
I think we have to look at how to turn those challenges as opportunities, right? Case in point, last year we spent $950 million importing iron rods, which is used in real estate. Our biggest import market for real estate products is from China. How do you look at the value chain, and how do we produce some of those things locally? Because if you take that value chain, you create jobs. One of the biggest impact of real estate is if you want to build a house in the village, by the time you get the bricklayer, by the time you get the guys that are doing the roofing, you're creating jobs. Now imagine that on a massive scale. Any policy pronunciation you make in real estate and any incentive you give there has an impact on the value chain and creates jobs. And because about 9% of our GDP is real estate, the impact is very significant. So in my view, investors need to look at that value chain and take a piece of that value chain pie and say, this is how we're going to invest, and this is how our impact is going to be in that space, and this is how we're going to recover our returns over a period of time. Yeah.
Okay. All right. So what innovative strategies do you recommend for investors interested in the Nigerian real estate market to navigate potential challenges and seize opportunities?
I think we take a cue from what fintech is doing in the banking space and how it's been disruptive, in that area. I mean, at our firm, our purple, we are, from our real estate point of view, from our approach that we're pushing, we're also pushing very strongly our prop tech aspect of our business. Because what tech does is that it's like a catalyst. It has a multiplier effect on whatever is the underlying asset that's been built. I mean, right now, it's not that CBN has merged the exchange rate. You can, on your phone, send money to Kenya, because the rate is given. You couldn't do that 3 months ago.
Yeah.
And that's driven by tech. And that tech is not even by the big banks, right? It's by the microfinance banks, and the tech guys in that space. So tech is a multiplier. If you apply tech to real estate, you have significant multiplier effect because you enhance things like distribution, accessibility, ROI spread across an investing public, and then also you're able to enrich not the people that have billions of naira to invest, but great access of people that have 10,000 naira, 50,000 naira to also invest in that space.
Very good, Obinna. Just a one-off question here. There's been this huge clarion call, to have people invest in real estate sector, as it were, especially people probably who don't know the intricacies of the real estate, as it were. So in that aspect, rules have to be, followed, as it were. So how do you differentiate between the real practitioners and the fake ones? Because you see a scenario whereby they give you all these mouth-watering deals out there, and then you start thinking, okay, fine, if I do a little research about this, so am I getting a good deal here? So how do you differentiate between those who are authentic practitioners?
I think the important thing is track record and what has been done in the past. That's one. Two, I'm also aware that right now SEC is getting involved in regulating aspects of people that want to play in that space.
Yeah.
We are licensed by SEC, we are regulated by certain aspects of our product. So SEC's role getting involved, so laying down the rule book for those that want to get the investing public interested in structured real estate products. These are the rules of the game. And if you look at those guidelines, they're quite robust. They've done a pretty good job in terms of laying down the rules, the rule book. So from that space, it makes sense. There are also products out there that are structured to attract funding. So when you have infrastructure bonds that also invest in real estate, you have corporate bonds. I mean, Lagos has 25 billion naira bond that they put in the market for the Lekki Free Trade Zone. That's a real estate, construction related transaction. So if you have parties coming together, bringing out products that meet SEC rules, that give the investment public confidence, you attract investment in that space. Yeah.
All right.
All right, as the world actually moves towards sustainable practices, how can the Nigerian real estate sector adapt and embrace environmental friendly initiatives without compromising on profitability?
I'm always an advocate of sustainability, but it has to work. What's sustainable in Nigeria is not sustainable in Germany, because we all have different economic trajectory and path to growth, right? You have to approach sustainability from the point of view of within the context of the economy within which it is working. So you don't set different standards for different countries. Right now, we're a low middle income country, and we need to create jobs. So if you want to drive real estate and say you want to apply sustainability and apply machines, then how do you do about the intensive labor? So you have to have a balance. So sustainability for us is from a point of view of energy sufficiency. That's very important, because when you have energy sufficiency and energy efficiency, you also have improved profitability on the bottom line. So you have to have a way of ensuring that your products and your processes are efficient. Sustainability is also in terms of human capital, right? We all know people are leaving. We have heard of Japa. How do you retain those quality hands back? And you have to have flexible things that get them interested. Sustainability is also very important in terms of government policy. If you have policy changes that are coming up every now and then, it also distorts the business planning. So if you have a sustainable policy that gives everybody a try to say, okay, over the next over the next decade, for the sake of argument, these are phase 1 or phase 2 of how the government intends to encourage people to play in that space, it will drive investment.
Very good. Now, let's talk about digital transformation and, of course, the Nigerian real estate. What are the prospects here? And what are the current narratives, you think?
The biggest digital, when it comes to fintech in sub-Saharan Africa, the biggest space is here. Right now in the country, we are even exporting tech skills abroad. You have foreign companies that have Nigerians here working for them and in dollars. So how do you transmit that knowledge into products that expand access to real estate? That's where, as I mentioned, PropTech comes into play. Because you're taking those coding skills and programming skills and blockchain technology and giving people end-to-end access to the space and cutting off the middlemen where some of the value creation process is lost and dissipated. If you give the end user direct access to the product and cut off the middle guys, that value is also shared. And tech is a great way of doing that. The good thing for us is that for Nigeria, we don't have to import those tech skills. Those tech skills are already existing locally. All we have to do is expound on them, train the guys further, and get them fully engaged.
All right, talk to us about some of the success stories or case studies of real estate projects that have actually positively impacted local communities and contributed to the country's economic development.
Okay, if you look at how you measure, you look at projects that have income multiplier within the community. Take for example, if you were to come to Lekki 2 decades ago, someone says the backwater, there's nothing happening there. Look at the significant investment in estates in Lekki within the last 2 decades. It is huge, right? And that makes even Lagos State government focus a lot of effort in terms of how do we even improve infrastructure there with a view to driving taxation and etc. That Lekki success story shows the impact of real estate can have, within a community. I mean, some of us even use plumbers. If a plumber comes from Surulere price and Lekki price are two different things. So it shows you that even Lekki is considered affluent. So, so that's the impact. If nobody went and made those investments, those estates, provided those roads and extra, you will not create that opportunity.
So let's talk about foreign investment. How can we attract more of that into the real estate sector? How can the sector position itself in that aspect? You always talked about the ICT, tendencies and all that. Briefly, please.
I think we need to sell our story. We need to sell the success stories and attract foreign direct investment. There are two kinds of foreign investment. There's portfolio investment that buy bonds. There's foreign direct investment that invest in businesses. We need to drive those two. And that's very important because when those monies come, it also boosts our reserves, which also boosts Naira value. Right now, it's trading at about, depending on who you ask, between 800 and whatever. But then for you to drive that growth, there has to be more inflows. The biggest source of inflows in the country, in my opinion, are diaspora remittances. $23 billion enter this country every year. 23 billion. Oil is just a little bit above that. If you plug linkages in oil, max you get about 25. So for us to have an exchange rate of between 500 and 600, you need to at least $60 billion coming in annually to match what is going out and what's going to stabilize that. So real estate has a large role to play because that 20 billion gap, if you're able to attract, even if it's about, let's say 10% of that in real estate and the multiply effect down the chain, right? You create jobs, you stimulate the economy in that area, and also you begin to impact, on other sectors as well.
All right. You want to say many thanks to you, Obinna, for your time here on Newsday.
Thanks for coming.